Okay, we got another all-time high on the S&P 500. We got for the fifth day in a row, fifth day of a really small upward move too. But today's range was not like today's move was not like the prior 4 days. Very small ranges, extremely low volume. We still have extreme low volatility, but we had a bounce in volatility today from really extremely low on Friday, and we had some pretty standout patterns today, despite how little of a gain that we actually had. There were some pretty interesting patterns that came out of the charts that can be a little telling. So we're going to break those down, what those patterns are. We're going to take a look at the Russell 2000, see what it's telling us, what kind of trend it's moving towards. We're going to break that down as well. We're going to take a look at our trade idea of the day of a stock that is kind of centering around a pretty significant area, sideways action, kind of what the Russell 2000 is doing. It's got a little bit of a bullish bias, but it's been so sideways and so neutral with an earnings announcement coming up. So we're going to talk about how to trade that. So let's go ahead and get started. Today is Monday, August the 16th, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off as we always do with the market forecast indicator on the S&P 500. And you can see for the second day in a row, we've gotten another overbought cluster. Again, a mature, even if we say like this intermediate run just barely started here in May of 24th, we're going on now 3 months of that intermediate rally. Of course, we've actually been going on one for 9 months, but if we're trying to find any kind of hint of an intermediate pullback that we actually did have on the NASDAQ here, then 3 months along to have an intermediate cluster, not only in the S&P 500, but we also got another cluster on the Dow. We didn't get one yesterday or Friday, but we got one last week on Wednesday, and then now another one again today, and then of course the NASDAQ Composite getting us a cluster today as well. The only one not getting you a cluster is the Russell 2000, which continues to show signs of rolling back over without. See, it's one thing to get they go from bullish territory to bearish and vice versa. Bullish territory to bearish and vice versa. But when you go from bearish to neutral and then you can't get to bullish, because see, it usually just goes really quickly from one side to the other. If it doesn't go from one side to the other, as you can see here, we were bullish, and then we came down to bearish, but pretty much stayed neutral, and we went back to bullish. That's kind of the idea here. Is we were bearish. We were supposed to go to bullish, but we've been stuck in neutral, and more than likely means we're going to go back into bearish territory. The short-term sentiment's more bearish since that low point there. The intermediate line is rolling back down, almost catching back down to the market sentiment line, which continues to roll down to. The momentum line still oversold. So more of a bearish market forecast, not surprisingly, than what you're seeing everywhere else. Where everywhere else we were off of the lows today, just a little bit of a lower shadow there. Really, really bullish candle in all regards. So if you take a look again, we're just barely starting the week, but look how strong the near-term sentiment line is for a second consecutive week there. I mean, it's a very strong run to the upside, but very minimal moves. You can see just a little bit more than 0.25%. So when you look at the moves from this perspective, 5 days in a row of all-time highs. But if you notice, the biggest change we had to the upside was less than 0.3%. In fact, I think I retweeted out from Ryan Dietrich about how rare it is that we get 5 consecutive all-time highs like this that are all so small, like all less. To the point where look at the historical volatility has just dropped off the face of the earth here. It's just extremely light, down to what, 0.0795 here. Let me just move this. I'm going to show you some perspective on that here in just a second. But let me get this down to the current value, 798. There we go. So that's where we're currently at. So let me just give you a little bit of perspective on just how low that is. It is the lowest that we've seen here since the bounce off those lows. You can see going into those lows. Here we go. Going into COVID, the COVID peak, we were down below these lows just a smidgen there. And you can see we were really down below that in earlier 2019, and then you can see some other levels where we were down to about 0.5 is about as low as we got before we started getting some bearish candles there. This was back in April of 2019, heading into that intermediate rally. You can see how low we were here going into all these bearish bars. So needless to say, I mean, that's a widening gap, which is interesting to see with how low the VIX was. The VIX bouncing up today with historical volatility still grinding to the downside. You can see a gap down of all these up days that we've had. What, 1, 2, 3, 4, 5, 7 out of 8 up days. This was by far the biggest, not the only. We had 2 other really small gaps to the downside, but this was the only one that had a significant gap to the downside there. So that's why your momentum line went up so high, because we went off of the lows. We had gapped down and moved down early so much. So we had rallied throughout the day so much that we got a really good gap. I mean, we have what, a 42-point range compared to 7.5 points on Friday, compared to 25 on Thursday, compared to 13 on Wednesday, compared to 15 on Tuesday, compared to 14, compared to 11. I mean, that's the biggest 20 there, 16, and then that. So this is the biggest range we've had since that 50-point range. Another day that we had the momentum line getting up to these high levels. You can see we just don't get these kind of moves, these big, large ranges, but today we did for the first time in a while there. So it makes you a little wonder just a little bit. The Dow Jones, you can see, also getting us a pretty decent range. Of course, the NASDAQ getting us a pretty decent range too, but and the NASDAQ not really getting us a new all-time high with this cluster. The high still remains from earlier this month, the day after we got the last cluster, before getting this cluster. So interesting to see the patterns showing up. Again, you look at like the S&P, the RSI and the CCI still at really bullish levels, but if you look at the Russell 2000, and we are obviously moving down the bearish levels. The CCI already down the bearish levels, back down below -100 really easily, moving towards, we're still in the neutral zone for the Russell, but moving towards the lower end of that neutral zone. You look at the directional movement index, which still shows, still shows a bullish change, even though you notice now, last week we had been kind of moving up. In fact, on Friday we had been moving up, but with today's move, because we moved so low, it brought the positive indicator down and pushed the negative indicator up. So not necessarily the most bullish directional move there. And then on the other hand, when you look at IWM, its directional movement index, which had been bearish, but been kind of consolidating here, renewed. So we're back below 20, back above 30. That's a bearish breakout. Now, granted, nothing's ever 100%. You don't look at one indicator by itself, but when you look at this particular indicator by itself, that pattern is the bearish breakdown pattern. Looking at the Ichimoku cloud, still obviously a very bullish, strong bullish trend. That's why, you're not going to falter here just on a whim. Like it takes a significant move, some kind of catalyst. I mean, look at the move back in 2020 it took to finally break how strong a trend that was when we were as strong as we are right now. I mean, we won't just kind of grind to the downside here. When we are this strongly bullish, you can see again, there's that September 2020, when we were this strongly bullish. You can see over here, really kind of significant move that ended in June, that bullish run. You can see over here when we were strongly bullish, you saw the type of move eventually that ended that bullish run. Again, how strongly bullish we were over here for so long, and you can see the intermediate pullback that we had in May of 2018. So obviously we are back to that kind of a trend. The only difference is this time it's not following along with others like the Russell 2000 holding that resistance at the with the cloud there, back to a noisy level without really getting going to the bullish side of things. Look at the Bollinger Bands for SPY, and easily in the upper quartile, flirting with the upper end of the value area as we continue to push that up higher. On the other hand, IWM just cannot get through that point of control, and instead we're back into the lower quartile for the bandwidth. And you can see the bandwidth is really shrunk. I mean, to really, really low levels. The IWM is setting up for a breakout type move. The question is obviously in which direction. Nobody knows. You would anticipate it would be, a move to the downside, considering the market forecast and everything we've been seeing. But obviously nothing's ever 100%. As you can see, we've been on a bullish momentum run that's now waning, as you'll see at the MACD as well, with the Bollinger Bands inside the Keltner channel. So again, all we're kind of waiting for is a breakout of the Keltner channel that will push us, get us to a green dot that will push the bands out of the Keltner channels, which are both moving in right now, and get us moving in a direction, one way or the other. And you can see now if I go to the MACD and stochastics, there's your MACD, still pretty positive. The histogram rising a little bit, well above the 8-day moving average still. Completely different on IWM. The MACD is rolled over. It's crossing below its moving average. I don't think, just barely crossed below its moving average. The 8-day is crossed below the 17-day. Looks like the histogram is still just barely positive here. Actually, I think it's actually a little negative. It's gone from 0.34 to negative 0.02. So yeah, even the histogram is barely gone negative. The blue line is barely gone negative, which means the 8-day is barely crossed below the 17-day up here. They're both still above the 30, though all are falling. And then the 50, you can see, is held for a resistance, and it's falling. You can see that when you trade in between, you think, oh, okay, well here you can see you broke the 17 and the 30 and the 50, and you're able to get going. Here you broke through the 17 and then the 30 on successive days, traded between the 30 and the 50, and now are back down below the 17 and the 30 in the same day, and then now back, down below, easily down below the 30. So that's more of a bearish kind of a breakdown. If you look at some kind of consolidation here, you would say that this is a relatively bearish rollover, according to the MACD and the stochastics, to the point where if you look at this chart, which obviously still shows you bullish candles, so very, very high momentum. You notice the momentum is not getting any higher than 8%. So the gap between the 50 and the 200-day moving average are both going up at the same level. Like, it's rare for that to do that, but it's doing it, for an extended period of time now, because that line's been flat for a long time. It's just sitting right at 8%. Of course, not the case for the Russell, and the Russell is back down to a bearish candle. Little bit of actually it looks like the high is right at the open, so no upper shadow at all yet, and then remains to be seen how we end up here. How we end up looking by the time we finish the week. We know what kind of, because right now, remember, we are trading 21.92 is the low point. We're at 22.03, so we're off of the lows today. But again, if we do, we're only one day into this candle, so we got 4 more sessions. If we keep pushing down, following that MACD and stochastics lower, then we'll push that candle to be a bigger size by the time all is said and done. So that's the pattern that we're seeing on the S&P and the IWM. You can see the increased number of red bars here on the Russell 2000, even though it's got it's lower volatility. That's kind of the pattern that we will expect to see eventually on SPY, going from more green bars to more red at some point in time, right? Not obviously when you're gapping like this with common gaps and you're going to fill in. You need a little bit more. You either need a gap to the upside and then to come down with a significant downward move, or you need a bigger gap to the downside. It's a little bit more significant than that, right? It's got to be at least what would be now about more than 2/3%. It needs to be bigger than at least 1 standard deviation, if not 2, and then it's got to finish without ever filling in for it to be a runaway gap to the downside. Otherwise, we need to have a bullish gap to the upside that we fill in on the way down throughout the day if we're going to get that type of move. If you take a look at IWM, again, flirting with that lower, you can see the 4-week low is going to move up here tomorrow to this day's low point, and the day after that it's going to move up right there. So the Russell is going to be in a very tight range here in a couple of days. And we're going to be really close. Actually, we're going to be pretty darn close to both the high and the low. But we're going to be closer to the low than we are to high. And you can see if we break through the 4-week low, you know, that the midpoint is going to be right up in here now. And we're going to be in the lower half of the 4-week range if we don't break back up above that 4-week point of control there. Again, I showed you the volume in the trading range today. If you look at the volume above average, 73 million shares, the trading range at 4.25 points. Again, those are both higher than average numbers. So when you look at it from this perspective, 73 million's up here, 4.5 points is up here. Those are both higher than the current numbers. You know, that's not a bullish range, right? Like that's, you know, if these lines going up is typically bearish, it's an increase in volatility, not bullish. So, you know, typically when you get the really extreme moves to the downside, like these that we've gotten over here with the bigger ranges, including the overnight ranges and the spike in volumes, they're bought up really quickly. But when you get just higher numbers that are kind of in this, you know, right around 80, so above the averages, but not, you know, off the charts, then those are tend to be more gradual, and we get these kind of moves here that lend us up when we can be in a more extended period of volatility. Let's take, speaking of volatility, as extremely low as we were on Friday, obviously we bounced back up, but finished the day well off of the highs in volatility and back down to extreme lows again. So another day, 7 days now, closing below 80% on the VIX relative to the VXV. So as much as we bounced up, and we expected that we would, we're still extremely low on volatility, and we're still set up for, especially from a seasonality standpoint, that type of bullish move on volatility that we see to come. Until we get some kind of catalyst, though, you know, and we had multiple opportunities for catalysts today, whether it's geopolitical, whether it's, you know, Chinese economic data, whether it's U.S. economic misses, whatever the case is, taper news coming out in terms of a kind of a more accelerated time frame for that. Whatever it was today, there was an opportunity, and the market still shrugs it off. So the market still is going to continue to grind through until it gets a catalyst that's not expected, that's not already being discussed, before we get that type of move that we've seen. When you are this low in volatility, it takes, you know, a bigger move like this over here, for an example, back in September, to break you out of that. So, and then you notice those can kind of come out of nowhere. So we just need to be aware of that, and not necessarily like get out of all your bullish trades, because you might miss a whole another month or two of you know, unexpected rallying, but still rallying nonetheless, because that's the trend. So if we just get out of all our bullish trades now, we'd miss all that. But we don't have to be all, but like I always tell you, don't have to be so binary in terms of I'm either all bullish or I'm all bearish. Especially in an active trading portfolio, you have the ability to be different grades of bullish to bearish, and be able to take advantage of both, especially with all the different stocks that you have available to trade on and all of their own individual charts. So I think obviously it's the time that we kind of lower that bullish risk in our portfolio, as a day like this over here on the left can come out of nowhere, and just especially coming after clusters that we've been getting, and throw us all for a loop if we're too overextended on one side of the trade. Alright, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That will notify you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us two things. You liked our video today, and it tells us you want us to do another video again tomorrow. Quick way to give us feedback if you like our videos. Of course, if you don't like them, you don't have to watch them or click on anything. But if you do like them and you want to let us know, you can do it with one click. You can do it right now while you're watching. Also, comment down there. What did you get out of our videos today? What stood out to you? What questions or comments do you have? Post those in the comment section. Join our website at marketscholars.com. There's a link popping out right there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content in between the videos from day to day. There's my handle right there at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, if you're watching us on our website, look over here on the right of the video and you can see the Market Outlook live video. This is a video where I review all previous Market Outlook trades to see whether we should stay in them or get out of them. We actually got out of one today. We also put on our trade idea today's trade idea already before the market closed. This is how you get to that video. You can also come up here and click on Market Outlook Live Trade Review. Also our upcoming trading rooms over here on the right hand side. You can get those there. You can get all the rest of them up here. All of our paid subscribers get access to all of our trading rooms and the Market Outlook Live Trade Review video. Of course, our premium subscribers get access to them for less money per month. On average, as well as access to other premium tools and resources and online forums for our premium subscribers as well, and Q&A sessions too. Come down here and click on this heart. It opens up a new tab. Hit this like button right there. Also come over here, hit this thumbs up icon. Opens up another new tab. And click that like button again. We ask you to do that just because, again, the more people that engage with our content, the more Facebook and Twitter will promote our content to all of our followers. So that's why we keep asking. It also benefits you because Twitter and Facebook will promote content in your timelines from the accounts that you engage with. So if you want to keep seeing our stuff, make sure you do, then this one click is all you need to make sure you keep getting it. All right, now let's take a look at what's driving the price action. You can see over the last 3 months, Qs continue to still be the strong performer, and emerging markets in the last couple of days have now gone to a negative 3-month rate of change. So pretty negative on a lot of these other risk asset classes. Small cap stocks are barely positive. Commodities are coming down off their highs. You can see small cap stocks highs are way over here. Emerging market stocks have been down pretty much all of this 3-month period. So it's been a little bit of a risk-off move with bonds and real estate. You just haven't seen gold, but the dollar's been bullish over the past 3 months. So let's just take a look at how that's been performing here today. We'll look at today alone. And you can see today it was gold and bonds and the dollar. I mean, this was real estate a little bit at the beginning of the day, and foreign bonds too. And this was pretty much a risk-off day at the beginning. And then you can see the Qs rallied by the end of the day, but not small cap stocks. Small cap stocks pretty much didn't finish at the lows, but finished well off of their highs. And emerging markets stayed down too. Developed markets a little bit off their lows, but not as much. It's pretty much just a strength in the Qs that allowed the SPY to actually outperform the Qs, interestingly enough, by the end of the day, and actually slightly outperform long-term bonds by the end of the day today. So let's take a look at some of those, some of these different asset classes and how they're performing. You can see bonds bouncing. We saw that bounce on Friday, continuing that bounce today, even though it's off of its highs. You can see the intermediate line again. The idea that you can go from bullish territory to bearish pretty easily through the neutral zone, but you notice the intermediate line stopped short of getting into bearish territory, is now stuck in neutral, which makes it more likely that it will go back up to the bullish territory there. Gold, you can see the nice rally off of extreme oversold levels. We talked about that last week, and that's a nice, good bullish near-term run that would suggest that we're going to get more of a little bit of an intermediate run out of this too, even with the dollar rising. You can see the dollar's actually started to fall. Had a pretty big drop yesterday, but only getting up to the 8-day or the 30-day moving average. As you can see today, bouncing back down here. This is today's move. Just barely started, but this is today's action, holding the 17-day on Friday, and now coming back down maybe below the 8 days. So we're definitely on a bearish convergence, right? Because we're below zero, but we're moving towards zero. So it's a bearish being below zero, convergence meaning moving towards zero. So we're on a bearish convergence, but we're at really, really low levels, which opens us up to the potential of a new bearish divergence, or obviously a bullish divergence, especially if we were able to close above the 17 and the 30, and especially above the 50, all at the same time. So you can see when you get those kind of breakdowns, they tend to be pretty bearish down there, and so that would be obviously the opposite would be true if you were to move to the upside. Over here, you can see it was just one day at a time, and that's why we weren't able to hold it. And we're kind of stuck here, kind of moving around this level. If you look at the volume profile for the ETF that tracks the dollar index, this is this level right here, around just a little bit under 25, is a pretty key level from a volume standpoint. Here's the 2-year version of that, and you can see the weakness in the dollar and why the stock market's been so bullish. But obviously that weakness in the dollar is not so weak anymore. But you can see a real significant resistance up above where we're at right now on any strength in the dollar, but also how much volume there is down below us. So there's a lot of volume here that's got the opportunity to hold us up at these levels. It looks like we got the 1-year chart. So right, at these levels here, and if we were to go down, there's a lot of volume here to keep us from going down to lower lows, to essentially help us form a higher low point and then bounce off. We got this double bottom right here with this high in between that we would have to break through, which happens to be the point of control that we'd have to break through to really get the double bottom working, right, and getting the same size move replicated to the upside. Of course, we always look at Bitcoin as a reflection of speculation, speculative risk appetite, right? It's one of the most speculative trading instruments that we have right now. It did get a cluster heading into a new intermediate rally, so that's a bullish cluster more so than a overbought cluster. So it's something to keep an eye on there, though. That near-term line is giving us a near-term divergence, right? This higher level with that strong momentum move. So we obviously got higher highs here with lower highs. With the low point from last Thursday kind of being the low in between those, that if we break through that, that would be our issue, right? So, again, and this is just a little bit of a sign of how speculative people are right now in terms of risk appetite. We are back above that 38% retracement, so it's trying to make a run again. If we can hold that, great. If it can't hold that, then obviously a move back down to 31,000 would be in the cards. And again, another reflection. We've been on this risk off mode since May, and that's when the NASDAQ. The difference is that the NASDAQ started to go down along with it. Here we go. We go to comparison and pull up NDX here, which is interesting because NDX has actually been acting more of a safe haven index more so than anything. But the NASDAQ did have a pullback here, and just when the Bitcoin came off of its highs, the NASDAQ also was coming off of lows. But from this point going forward, this is really when Bitcoin started its decline and the NASDAQ rallied. So again, you can see the safe haven nature of the NASDAQ right now. Whereas if you look at instead the Russell 2000 as a reflection of risk, an equity portion is reflection of risk appetite, you can see how bullish they were together, and then Russell peaks, Bitcoin peaks, and from that point it's been sideways for the Russell and down for Bitcoin, and we'll see if this is enough to get a new trend going or not, because it's not going on the Russell 2000. Let's take a quick look at sector performance and look at it today, because remember today it was kind of a risk off move today, and you can see what's been winning over the last 3 months. But remember how we started off with a risk off move, and it was really the Qs that rallied. Well, utilities, healthcare, staples were your big winners for most of the day today. Industrial stayed pretty bullish and finished today strong. Technology rallied up, and that was your big winner. A little bit too with communication services, but energy, materials, and financials stayed weak and stayed negative, and weren't able to really rally back up to positive like everything else. So, again, this idea of, let's go actually to the sector 12 grid right there. You've got, this is where the strength is, and it's starting to come off. The strength is starting to come off in discretionary. It's converging. You've got a bullish convergence on XLC, and you can see financials, which had really bust out there, and industrials, which got that cluster, and materials which bust out, they've all kind of halted, and energy hit resistance and is rolling back down, breaking back down today. And you can see where the strength is now. The strength now is in healthcare staples with a cluster today, and utilities, and a little bit in real estate. It's a safe, we're kind of moving from a cyclical area to more of a safe haven type move in these safe haven areas. People positioning potentially for risk aversion to creep into the system. That brings us to our trade idea of the day. So I want to take a look at Best Buy. Best Buy has been on a kind of an up and down move, a little bit more of a bullish bias, but an up and down move. You know, pretty significant drop on Friday after getting well above the moving average, but still staying above the moving average. Even though you're above it and moving average is dropping there, that's why you have the yellow line. If you look at its long-term chart, you can see it's been, you know, we've had this bullish breakout move. We've been consolidating ever since with this convergence going on with very neutral candles here from week to week to week. From a MACD and stochastics perspective, you can see, you know, how we had broken back down after breaking through the 30-day and having everything breaking through the 50 and the 30-day moving average, both the 8 and the 17 as well. Friday was a dip down below the 17, but we bounced right back up above the 18. So, but not really a good bullish momentum going here from a MACD perspective. And you can see that as well from an Ichimoku cloud perspective. There's not a whole lot of, I mean, it's a lot of noise. We're actually in the cloud. So it's really, there's no real directional move going, even if we do have a little bit of an upside bias. The negative indicator is still above 25. The positive is actually below 25. So it's kind of the wrong flip there. You can see RSI and CCI were, you know, I mean, about as neutral as you can be, right close to 50, right close to 0. Very, very neutral on all of these indicators. And we're trading right around pretty much the only point of control, the only volume node that we've got. We've been stuck here in this range for pretty much most of this year. So as you all know, that's just a nice little setup I like to look at for an iron condor spread. Now it does have earnings coming up here pretty soon, so we do need to have to account for that. But I'm going to sell here. The 30 delta was actually a little bit lower than that when we got into this during the Market Outlook live session. But sell the 110, buy the 105, sell the 125, buy the 130. That's where our strikes are. You can see I get, you know, typically I'm going for about $300 on $1,000 of risk. That's the 1% mark that we've been kind of shooting for, and then a 30% return on risk. Well, here we're getting $400 of return, which is a little bit more than what we shoot for, but you're getting 2 credit spreads, so that's pretty normal. But I'm getting for a lot less. Of course, that's because there's earnings coming up and there's relative volatility there. But if you look at where those break-evens are, especially when you put them on the chart with the Bollinger Bands here, they don't look as wide there, but they look, you know, you can see they're pretty much, we'd have to get new all-time highs to get up to the upside, and you've got some pretty good support at the bottom of the value area down here on the downside. We've gone through them a couple of times post-earnings previously, but only to come right back up by the time, in this case, our expiration date would be ready to go. And now you have, you know, what you didn't have over here that you have now is you've got this big center of gravity that you would have to really have some significance to bust out of and get away from to kind of get that escape velocity. And if it, and in my opinion, the biggest risk to an escape velocity would be to the upside, and that's where I have more room to work with. I've given it some room to run by going to a lower delta on the short contract, on the short call contracts. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link that's popping out in the top right corner of your screen. That takes you to our Market Outlook forum. You can open up any new threads there with any questions or comments you have. Reply to anybody else's threads, and let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel. Like us, click that thumbs up icon, as well as like us on Twitter and Facebook. Comment on the video. Have a great rest of your Monday night, everybody, and we'll see you all next time.